back with the stocks staging a huge turnaround yesterday. My next guest is giving most of the credit to positive comments from Nvidia CEO Jensen Huang at a tech conference. Nvidia led the tech turnaround, but should it get all the praise? Let's ask Nick Colas. He's co-founder of DataTrek's Research. Nick, people might think, well, why are we unpacking what happened yesterday? Well, because it has a bearing on whether this market is all about the Fed and rate cuts and PPI and CPI or all about AI.
Yeah, totally true. I mean, we've got a real tug of war market right now, which is kind of typical for a mid-cycle period, such as we're in now. Some days we get some good news about the economy. Some days it's a little bit more worrisome. And some days stock fundamentals like Nvidia really play out. So it's a very classic tension. We're bullish over the medium term, but think this kind of tension is going to create more volatility over the next couple of months.
Yesterday, we talked about how the Dow had been down 700 points after the CPI data first hit. And as odds of a half-point cut diminished, the market sold off. Then it turned around and all of a sudden looked so much better. But Nvidia was popping 8% in part after these comments that Huang made. So what does it really tell you about the significance of the size of next week's rate cut?
It tells me that, look, the markets expect 25, and that's the right approach. If you look back in history from 1990 to present, whenever the Fed's cut 50 basis points as the first cut, we've had a recession. 2001, 2007, 2008. Whenever it's been 25, we haven't had a recession. So 25 is the right kind of move. I think the market understands that. It doesn't make the tension between a slowing economy and stock fundamentals any easier, though, and hence the volatility that we're going to see.
That's a really, really interesting data point. Let me kind of flip it around, though, and say, okay, if Jensen Huang hadn't spoken yesterday, if we were down 800 on the Dow, right? How is AI? I mean, I think in some ways AI is quite obviously trying to rescue and lengthen and whatever you want to say the business cycle. And it seems silly to talk about, but maybe in a microcosm, that's what's going on. As long as it's continuing to this investment cycle, then the Fed probably can go 25 and everything's okay.
One hopes for sure, but, we still have to worry about the labor market particularly. If you look back at the classic signal of a recession, it's always been 2 consecutive months of job losses. And we haven't gotten there yet, but the job numbers have been so wonky that it's a little bit hard to tell in real time if we are seeing a negative print because it could get revised negative. So we also have some informational issues as well to this market adding to the volatility.
You are talking about, whether you'd buy tech names like Nvidia or maybe some that are a little bit more under the radar. Tactically speaking, what do you think are the best opportunities here?
Best opportunities, I think, are away from the semis right now. Semis versus software is kind of the classic debate among tech investors. And semis just outperformed by 4 standard deviations over 100 days versus software. A huge move. And anytime it's even just on 2 standard deviations, software is going to come out to outperform over the next 100 days. So, an ETF like the IGV, I think, is a better play right now than an Nvidia or an SMH, which is the ETF for semis.
You also like small caps, and this is hugely controversial as well. There are some like Rich Bernstein who say they're outperforming. If you sort of look at some of the recent momentum, they're really poised to do well. And others yesterday who were saying, no, you don't want exposure, Paul Christopher said, until 2025. Where are you on exposure to small caps?
I think small caps will work at the end of the year. They really benefit from lower interest rates because about 40% of the Russell, for example, is unprofitable. So these companies need access to low-priced, reasonably priced capital, which is the debt market. So as rates come down, they'll get incremental capital, and that should help. But they've been really just this heartbreak kid group this year where they've had a huge rip and a huge fallback and another huge rip, and now we're in no man's land again. So that's just like we are with the market. So if we get more volatility, that's a group to add.
All right, and you're buying the financials. You'll buy more, on the markets if the VIX jumps to higher levels from here. For now, we'll leave it there, and we'll keep an eye on Jensen Huang. Nick, thanks so much for your time. Nick Colas with DataTrek's.